welcome to Burke & Smythe's weekly property tip after a short hiatus. I'm Mark Madden, and joining us again is Jason Werrick, our sales manager and part owner.
Good afternoon.
Thanks, Jace. Very quick one today, and there's a lot of noise out there. So if you're in the industry, if you're doing open houses, if you're selling, if you're buying, we've got so much advice on and opinions on the interest rates,
Yes.
finance, what the market's doing even. What's your take, mate? Let's start with interest rates. And no crystal ball. We'll hold to them. Simple.
Look, I mean, talking to people in the finance world lately, and that's our first recommendation is talk to people that are in the industry, not people that aren't. So, as a real estate agent, I'm not here to guide anyone from a financial point of view or to quote anything, but certainly when you talk to people in the banking world, their indications are, although the RBA could still make some changes out there with a lot of the low rate fixed terms coming off over the next 6 to 12 months, I suppose, that should start to see some stability with the RBA's view of things and the economy and how it's all going with inflation. So, a few whispers is that we potentially will see interest rates settle down and potentially even start to ease back a little bit next year. So it is a crystal ball. Who really knows? Anything could happen between now and then. But certainly that's the general consensus that we're getting from people in the know.
So if you don't know anyone in the RBA, speak to one of the banks. That's probably the best thing. And finance as well, that probably goes hand in hand with that. What you should be doing with your loans, speak to a mortgage broker, speak to your bank.
100%.
Whether you need to refinance, whether you need to do what you need to do. Speak to the pros. Don't speak to the old neighbour next door that's got 10 properties because he's probably paying next to nothing, or he probably owns it.
Everyone's viewed differently by each bank. So each bank has its own policy and each client has their own personal situation, whether it be income, age, employment status, all of those things affect every person. And one bank might have a different view of that client than another. Therefore, they'll rate them differently. And so highly recommend chatting with a broker or your personal bank manager and get some advice from them.
Everyone's personal sort of income as well. You don't know who the person you're talking to. They might have a lot of property that they can roll over.
They could have a lot of cash under the bed.
In the freezer. Lastly, and as we said, nice short one today, the actual real estate market. Now, this is coming more, I'm finding, from buyers that they're getting a lot of comments from agents on different things, and it's different from one agent to the next.
Yes.
Firstly, probably investment. Or investors, or the rental market. It's very, very, cloudy. It's probably the best way of describing it. Any thoughts from yourself?
I think from an investment point of view, if you are looking to lease a property out, I'd recommend getting a couple of opinions. Because one, and we all, I suppose, do this, but we all work off our own situations and experiences that we individually have had. So you might go to an office where they might have been struggling to lease out some properties promptly or at higher rent values, or they might still be potentially working off some values that were a little bit more elevated maybe 6 months ago. So they're struggling to reach those levels in results. So they're finding it hard.
Could be database too.
That's right. The database level of the business itself. So they might be finding it a little bit hard to achieve some of those results, and they might be starting to creep up a little bit on their vacancy rates. Versus some others that probably have given some more realistic opinions and estimates on those, renting them out a lot faster. Therefore, more positive in their response to the marketplace and how they can manage that business. So I think it pays to probably get a couple of opinions, and at least then you've got a bit of information to gauge for yourself, and not just rely on one person.
And not forgetting, obviously, the 10-year vacancy rate is still 1%. So regardless of what real estate you're talking to, that is still record low. From a purchasing point of view, we've even heard buyers starting to say that real estate agents have been saying investors have started to leave. I certainly haven't seen that. I've probably seen it the other way.
Yeah.
Any thoughts for yourself too, mate?
Yeah, I think again, it probably reflects more on the individual agent, on the price point of the portfolio that they're managing at the time, the listings that they're trying to sell for owners. If they're higher price listings, of course, they're not going to see as many investors these days because of the rates lifting up. So the investor levels, because they've crept down a little bit on where it's more popular to invest in. So if you've got more properties at a higher level, you aren't going to meet many investors and the inquiry is going to be low. If you've got a broader range portfolio of homes for sale or in the lower end, then we would be seeing investors every day of the week. So they are still out there. Obviously they're dollar savvy because of the rates, so they're trying to balance those out, and hence as those rates have climbed up, their price points drop down on where they're looking to invest in at to balance out deposit level and serviceability.
And rental income as well.
Yes.
So just a little clarity, obviously I'll put some more information down below. We just wanted this to be a quick video, seeing it's been a couple of weeks since we appeared. So thank you for watching. Jace, thanks again.
Thank you very much. Appreciate it.
Any questions, feel free to tune in. I'll put Jace's email on there as well if you do want to contact him. But in the meantime, we'll see you next week. I will be back next week for the next weekly property tip.